Chat. Chat. Another beautiful day to be a GameStop investor, huh? The market's down over 1% on every index. And here we are, basically flat. Feels good, feels good. Feels good. Oh, Bitcoin's about to hit 64 too. Interesting. Started the stream up late. I woke up, well, I didn't wake up late. I woke up and then fell asleep again. And then I went and did cardio and sauna. What's up, snakes? How you doing, snakes? Hope you're good. Hope you had a good weekend. Did I hit a not in Vegas? I didn't go to Vegas. But no. I lose every time I play slots, basically. Well, I shouldn't say every time. But most times. What's up, P? What's up, P? Any news? There's quite a bit of news. Not really, though. I guess the US killed some, like, Mexican drug cartel leader or something like that. Trump raised tariffs, I think. Or he's trying to raise tariffs. I don't know if he did it or if he's trying to. I know there was something else, but I don't know. I don't think there's any important news. Those are the only two things that are potentially important. But I don't know how important the drug cartel thing is. I don't know if you guys watched that video I posted over the weekend. There was that Pokemon heist that was pretty wild. A pretty wild heist, I should say. Pretty wild heist. Wow, financials are down 3% today. Financials are getting clapped today. I saw American Express was down like 7% or something. I think interest rates hit below 6%, even though there's no economic data for it yet. The next one that comes out should be below 6%, but if you're paying attention in the real world, you already knew that. A lot of this economic data is lagging. So if you're in the real world and you're actually paying attention, you should have already, well, if you're in the US at least. I don't know about other countries. But yeah. You got Trump's State of the Union speech on tomorrow. I don't know how important that'll be, but that's an event that people pay attention to, I guess. What's up, Grady? Highest value cardboard theft of all time? What are you talking about? I don't know what you're talking about. What does the insider buying look like? Nothing there. Probably not going to be getting any more 13Fs, so nothing there probably. I guess you got a new position by Virtue Financial, 86,000 shares. That was reported today. Pretty late reporting there. They never updated the short interest, but for some reason it's now 15.84 instead of 15.8. So I don't know what's up with that, because they never updated it. Or the date hasn't updated, but that changed. So I don't know what's up there. And then crypto's obviously shitting, which isn't surprising. Although a lot of people in the sauna have been talking about crypto a lot lately. A lot of people think it's a scam, so like it's either gonna keep selling off and it's gonna go to the shitter, or now is potentially the best time to buy crypto. Obviously, I'm not buying it, but there's a lot of people talking about it lately. A lot of people upset with their losses. So crypto could be a good buy right now, maybe, potentially, I don't know. I wouldn't buy it, but it could be. What's up, Matt Romano? How you been, bro? It's been a while. Hope you had a good weekend. Yeah, Dow's 800 down 800 points today. The Russell is down like 2.5% at something at one point. The Russell was down a lot, but bounced back a little bit. IBM's latest AI casualty shares are tanking 11% on Anthropic programming language threat. Huh. Amazon to spend $12 billion in Louisiana data center. Airlines cancel thousands of flights as blizzard cripples East Coast airports. EU postpones vote on U.S. trade deal after Trump's latest tariff threat. Not much news today. Not much news today. I mean, that's also part of the reason why I started the stream so late. There's nothing really to talk about. I added this news site into the rotation. Yahoo News. You know, whether we actually find something to talk about here, we'll see. It's not going to be today, though. I don't know what SMMT is, so does it look like, does anything in the title say SMMT? Because I don't know what the fuck that is, and I don't care. It looks like we're reporting on hymns today by the title. Just saying. Maybe there's someone talking about SM, whatever the hell you're talking about. PayPal takeover, interesting news. Wonder who's looking at that. Oh, I don't know. I think PayPal's trash, so wouldn't be interested. If that's what GameStop acquires, I'm selling. Deadass. GameStop acquires PayPal, I'm selling. 100%. I'm done. It would be a good journey. It's been a long, good journey, but if they bought PayPal, I'd be done. PayPal's garbage. Just waiting for news on my heart. Well, I hope it's good news, bro. I hope it's good news. What's up, Ruben? Yeah, I don't care that the earnings report's coming out. I don't know what that is, so why would I care? You typing it in my chat a bunch of times doesn't make me interested in it. It's probably some trash stock because that's all people bring in here is trash. So I'm not even going to look at it. Blind Tekken 8 player reaches one of the game's highest ranks after 2 years of grinding. No way. A blind Tekken player? Is there any footage? No. Guy flies from UK to New York because hard drives are cheaper. Starbucks adds a new secret menu drink after Mr. Beast partnership success. I don't think there's any news to talk about, straight up. Resident Evil Requiem leakers deserve 10,000 deaths? What? Please don't post or share pre-release leaks. Lewd graffiti halts $2 billion NFL stadium build. I guess there's this Breaking Bad episode that's had like a 10-star rating for like a really long time. And I guess the Breaking Bad community like review bombed Night of the Seven Kingdoms. And then people from Night of the Seven Kingdoms review bombed that episode. And now it's only a 9.7. I think that shit's hilarious. I think that's pretty funny. What is Night of the Seven Kingdoms on? Is anyone watching that? I don't even think it's on Netflix. I'm not sure. I've heard it's really good, though. Jason the Ween completes 7-day island survival challenge. And the rest of this stuff's old. Ugh. Terrible day for news. Terrible day for news. Option flow coming in. Yeah, I see that every single day on Reddit. It doesn't mean anything. Never has, never will. Prices go up, prices go down. Everything everyone else talks about in between is irrelevant. There's nothing to talk about, no news. Pokemon releases new art of all 1,000 monsters for its 30th anniversary logo. Oh, that's kind of cool. RIP. Lamborghini ditches plans for its all-electric supercar due to close to zero buyer interest. Yeah, nobody wants a fucking electric car. Of course nobody wants an electric Lamborghini. Sounds terrible. Sounds terrible. Yeah, this sucks. Just no news, bro. Just a freaking Monday, bro. Freaking Mondays. Oh yeah, I guess the Xbox division under Microsoft got a new CEO or something like that. And it's some AI guy. So that's not good. That's probably not good for Xbox. Arc Raiders is getting beards. Nice. Some beards. Okay. Yep, no news. No news. Nothing exciting. There's a Burry tweet about GameStop. Avanti, GameStop, Samsung Electronics at book value every time. Short Amazon 2000, buy stocks in October 2028. I literally pounded the table in front of some investors on NVIDIA in 2015. Should have held. Feel like I'm forgetting one. What? Hey, Dr. Burry, I'm curious, what was your highest conviction trade of your career? Was it the 2008 short? Remember you saying you were extremely confident. Have there been other trades? Oh, yeah. Good for Burry. Good for Burry. Good for him. Why are you guys so excited about GameStop? It's not even up. It's literally the same price as it was a week ago. I don't know why you guys think this little upswing here is special. It's not. It's not. Same price action we've seen for fucking ever, so not really special. Where's their earnings call? They don't even have their earnings call posted? What kind of shit is this? How? Oh, right here? I think this is it. Where's the earnings call, though? Conference call can be accessed by dialing. Live audio webcast will be available. I have to dial in to fucking get this. Do I still have a Google Voice number? Let me see here. Might have to dial in for the fuck. That'll be a first. I've never dialed in for an earnings call. I don't know. Do I still have the number? Oh, I do. Interesting. This is gonna be a first. Dialing into an earnings call. That's gonna be a first. At least I still have my Google Voice number. It's been so long. Well, I guess we'll see. Oh, wait. I need to bring that back. Wait, I don't have a voice number? What? How do I not have a number? Oh, shit. Whoops. Whatever. Okay. Let's see, what's the number? I can't believe they're not gonna have a... That's so weird. 5, 10, 26, 30. Is it even calling? Oh. What the fuck? This is dumb. Why is it... I don't understand why it's a phone only. This is like some old school shit. How are they not with the times?
Welcome to the conference center. Please wait for the next available operator.
What? What? Operator? What? 5, 10, 26, 30. Referencing... Member will be participating. What the heck, dude? I guess I'll figure it out once it gets closer. That's just so weird. That is so weird, bro. What's up, Jared? How you doing? Hope you had a good weekend. Well, I guess hopefully we can figure that out when the time comes. Still got a while till that starts, though. Good thing I started the stream late today. There's nothing to talk about. What a surprise. What a surprise. Let's see. There's a poster on X claiming that GME short interest is 700% of shares outstanding. I believe he does some clever reverse engineering to discover how markets are made. He claims buy volume and short sell volume track together as part of the evidence to start his theory off. This is market making and is true for just about all stocks. I explained operational shorting by market makers / dealers in my final GameStop post. As I said then, this mechanism affects all stocks, not just GameStop. Nothing so sinister after all. Poster is working backwards to rediscover operational shorting again, which is neither directional nor illegal. The SEC report he cited for original data also discussed this market maker facilitation / operational shorting. Also, one may not sum short sale trades across days and then say it is this great multiple of shares outstanding. A single share can be bought and sold short many times over those days. Totaling shares sold short during a day or a week is essentially a flow measure that cannot stand alone and ignores the buy side of the transaction. Where the poster claims short interest is over 700%, the poster is more or less calculating the rate of flow of those shares. Maybe the same shares changed hands 7 times over the period. This is the same mistake some investors make interpreting FINRA data on short sales. I recommend reading Final GameStop for a refresher on the fact behind these type of theories. Well, I can't because you locked it, you fuck. Although I do have a recording of it, so I could check it out. But yeah, good point. Good point. Yep, we're gonna listen to the earnings call. If I can get in it, we'll see. We'll see if I can even get in the earnings call. Won't be able to find out here for a little bit because it doesn't even start until 3. Well, 5 p.m. Eastern, I guess. 3 my time. Did you buy calls or puts this time? That's not how it works. It's not how it works. It kind of ruins the joke if yeah, kind of ruining the joke by answering that question. That's the whole point of this. I don't know what direction it's going. That's why I just say whatever. Although that Carvana one I posted kind of went viral, low key. I mean, not really. Only 10,000 views, but one of the highest viewed shorts I've posted in a while. But no, I can't. I don't know. Whatever direction the stock goes, I'm gonna say the opposite. Yeah, it died though. It was going hella viral over the weekend. But like with every video I post, it dies eventually. They never get views. This institutional investor one was getting hella views too, and then just randomly dies. Pretty lame. Pretty lame. This Pokemon one did okay, I guess. Not really, but for a random video that's not related to anything I usually talk about, I'll take it. Send it to 0. Yeah, I don't know. I mean, I don't want to be rude, Thomas, but you're just betting on earnings. Like you have no real interest of being an investor in hims and hers from the way you're typing. So like, I don't know. I just if you were like an actual investor who was like in it for the long term and not just playing for an earnings call, maybe we could have a good conversation about this, but you're just YOLOing on earnings, so there's no conversation really to be had. YOLOing on earnings isn't interesting. Doesn't matter how good the earnings is or how bad the earnings is. The stock's gonna do whatever the stock's gonna do. And whatever opinion you have on it is honestly irrelevant. So, we'll see what happens for the earnings. Anyone's opinion on this is irrelevant when it comes to earnings. They're going to post the report, and whatever happens is going to happen. But it has nothing to do with what they're posting because it's literally lagging information. The This earnings report is for numbers they posted 3 months ago, 4 months ago. So earnings is literally irrelevant. It's not a good indicator of what the business is today. What's up, Danny? Personally have faith in the company long term. I'm also a customer. Fair enough. All I'll say is I've never looked at him's financials, but every opinion is pretty irrelevant until you go and look at the financials and you see what they're actually doing. And last year they made 126 million, so at least they're profitable, but sitting on 700 million assets, 200 million liabilities, only 476 million in stockholder equity, and it's sitting at a 3.5 billion market cap. That is overpriced as fuck. So yeah, I don't know. They'll probably post another profit this year, but it's gonna take a long time for that $3.5 billion market cap valuation to seem relevant when you're only sitting on 500 million maybe in assets total. Seems very overvalued. But who knows? What's up, Kristen? Peptides manufacturing. I mean, that's cool and all, but they're still a tiny ass company sitting at 3.5 billion market cap, so it's overvalued. The valuation does not reflect what they actually have on their balance sheet. Making 100 million a year, it would literally take them 30 years to even get to 3 billion in assets. So, seems pretty overvalued. But who knows? I wouldn't buy it. Him's fair value is $40. You think their fair value is an 9 billion market cap? Okay. That is not even real. That is not even real. So what? Their revenue's 2.4 billion, and they're only making 100 million profit a year. That's dog shit. That is absolute dog shit. Outside of the one-off squeezes, something that anybody who thinks that this stock's heading anywhere over 30 in the next few years just being silly. That's fair. That's a fair point. Yeah. I just think it's overvalued. Making 100 million a year just isn't going to get them anywhere. They need to up that by a lot. One bad year is just going to erase all the earnings they've made so far. But we'll see. I would never buy it, but we'll see. Maybe it works out. Who knows? What's up, unknown? I don't know what you're talking about, but there's no rumor. PayPal is getting acquired. I don't think there's any rumor to that. It's happening. But if you're just saying that because you think GameStop's going to acquire it, I'll just say right now, if GameStop acquires PayPal, I'll sell. PayPal's a dog shit business. I'll 100% sell. I'll be done. Even the business practices of the company are questionable. I don't even care about all that stuff. It just seems overvalued to me. That's all that matters. The marketing plunder of advertising huge money into a product they had to take off the market after 2 days is definitely a bad hit. I think it's actually a benefit in the sense that I don't even know anything about that. Where's the PayPal rumors? Reddit. Where else? Reddit, Twitter. Where else would they come from? Probably more Twitter, but I don't know. I saw it on Reddit. But I'm dead ass. If they acquire PayPal, I'll sell. There won't be a question. There won't even be a thought. I'll sell every share. If GME acquires PayPal, I swear I won't put a cent in the market anymore. Dead ass. Dead ass. I'll start buying a bunch of shit to flip. Oh, I have no clue, Muma. It's just a rumor that you know how it is. You know how it goes. People just make up something and then they spread it. Doesn't matter. I'm dead ass when I say that. Like, if they bought PayPal, I would sell. I don't care if the rumor's true or not. I'll sell. I don't fuck with that. PayPal's a trash business. Complete trash. And I'm pretty sure PayPal still owns Honey, so I wouldn't invest in Honey ever. Why would GME buy PayPal? It's just a rumor, bro. It's not real. It's just some fucking Reddit shit. Everyone just repeats what they see on Reddit. Doesn't mean it's gonna happen. I'll go hands down all into Pokemon. I wouldn't buy Pokemon. I would just buy the S&P or start buying stuff to flip. You know, maybe I'd buy some Pokemon to flip, but I would buy a bunch of other shit. I would just start filling my house with a bunch of stuff to sell, basically. That's all I would do. Interview with Charles Payne was canceled and yet no news. Wasn't that like 3 weeks ago? I don't think there's any hype. I'm not hyped, so I don't know where this hype you're speaking of is coming from, but I don't know what you're talking about. There's no hype. There's a tinfoil rumors that people spread around, and that's it. There's no hype. Not hype for me, because I think that's a terrible business. So I don't see how that would be hype. GameStop buying a terrible business doesn't seem like hype to me. Yeah, known stocks go up, stocks go down. That's how the market works. It's never not been like that. You can reflect it why the stock went up to whatever you want, but stocks go up, stocks go down. News is irrelevant. Always has been. What am I doing? I'm just waiting for this earnings call. Not doing anything, honestly. Not really in the best mood. But there's also nothing to talk about. So, I'm just chilling. I'm sitting negative for days. Yeah, it's because you get volatility going into earnings calls. Why you crabby? I don't know. I'm just woke up in a bad mood, and usually if I go to the gym, it fixes it. But just not today. I think it's just a lack of news, lack of things to talk about. It just, I don't know. I like when there's actually things to talk about. I don't want to be like wasting anyone's time with a terrible stream when there's nothing to talk about. Jim Batty didn't park next to you. Um, I went to the gym late. I saw her there, but I just didn't do anything about it. She was on tread or cardio anyway. It feels so weird. I feel like it'd be weird to just like go up to someone while they're ripping cardio. And also, I'm just not. I wasn't even in the mood to talk to her, to be fair. War with Iran and giant civil war erupting in Mexico. That's news. Yeah, but that's not interesting. It's not something I want to talk about. And what am I supposed to say about it? Like, there's nothing to say. Like, oh no, the U.S. killed a cartel leader. What else are you supposed to say about that? There's streamers better than me with the politics stuff. I don't care about the politics stuff. It's not interesting, and most of it is it just doesn't affect a lot of things. Do it. Hey, I know you're a little busy. Hey, I know you're a little bit busy, and and I've been like I've had a crush on you for a long time. How do I not seem like the most pathetic person ever? I've been looking at you for a long time. I'm just too bitch made. There's a 12.5% and 17% move either direction. Your thoughts? I don't have thoughts. That's you just said my thoughts. I didn't even know that. But that's all you need. Women like a vulnerable, honest man, do they? Do they? Alright, you're getting banned, Folly. You're getting banned, bro. You were chill for a minute, but you saying some fucking weirdo shit like that, that's a ban, bro. That's a ban. You fucking weirdo. Probably a reason why you're investing in this trash stock. Makes sense now. It's all making sense. Can I hold your hand while you stare step? Oh, that would be a dream. That'd be a dream. You want to hold sweaty hands? You want to hold sweaty hands while we stare step together? Hey, my hands are really sweaty, and so are yours. I just want to ask, do you need a good thumbnail designer or video editor? I do, but I don't have money to purchase, so unfortunately, no. Women like to be approached by hot men for sure. Well, that's not me. I look like I'm homeless, bro. I look like I'm fucking homeless. She's gonna be like, she's gonna think I'm gonna be asking her for change. She's like, get away from me, fucking bum. I don't have any change. I don't have any change. I would use the good old trip and fall on the treadmill, and when she asks if you're okay, you tell her, damn, I didn't expect to fall for you so hard. Done deal. Before you know what she'll be. That was actually fire. She probably wouldn't care, though. Oh, man, that's actually a interesting pickup move there, Unknown. I like that. I like that one. Bring your homeless man cup. Change? You got any change? It'll help you pay for the services above. Nah, I'm good. I don't want a thumbnail from that guy. He didn't even listen to what I said. Aren't these the fucking people who make like Blue Chew or some shit like that? Love that you say you don't have the money. Just say the truth. I don't know you, and no thanks, bro. I'm good and don't want it. I mean, I really don't have money to buy a thumbnail. Thumbnails are expensive. I bought them before. And a video editor is even more expensive. Like every dollar, literally, if I have extra money, it goes to buying GameStop shares. Like, there's no thought or anything. Like, I literally leave like 100, $200 in my account for myself. Anything else is straight to the shares. Thanks for doing this. Appreciate you, Gregory. Appreciate you being here. This is about to be the best earnings of the season, you think? Could be a good one. Could be a good one. Aren't they getting sued by Nova Nordisk? I have no clue, man. I have no clue. I don't know anything about this stock. Need some chicken fingies? Some chicken fingies? That sounds good. That sounds good. Get the gym girl some flowers. Wouldn't that... I mean, that'd probably be good, but wouldn't that just be like so... I don't know. I feel like that'd be so awkward. Just getting some random girl I don't even know flowers. I feel like that'd be so awkward. Splurged and had Taco John's. That sounds gas. Just say hello first. Ask if she's waiting for her boyfriend. I mean, I'll talk to her eventually, I'm sure. Just when and if. We'll see. We'll see. We'll see. Set of flowers and balloons. Yeah, I'm not gonna do that. I'm not gonna do that. Moose! What's up, Moose? How you doing, Moose? God damn it, Kristen. Is that even the real Kristen? It's still debatable. Still debatable. That shit's hilarious, though. You're trying to impress, you deliver them to her workplace, probably spend like $150. I don't know where the fuck she works. I'm not a stalker, bro. I won't even talk to her. You think I know where she works? That's crazy. Yeah, I think Ruben has the most solid advice here. I think Ruben has the best advice here. Just gonna say it straight up. Alright, where's this earnings report? Enough about the gym girl. We gotta focus on this earnings report for now. We all know the likelihood of me talking to her is pretty low, so there's no point talking about it. Walking in the gym with a huge set of balloons. God, that would be so embarrassing, bro. That would be so embarrassing. Can't do coffee. I don't think he's into that. I don't like coffee. I really don't. Then don't remember anything about me. Can't confirm it because your memory sucks. That's your fault, not mine. I mean, just the quote you gave up there was just weird. I don't know. We have embarked on the most epic side mission. Get Corey with a gym thotty. Hopefully she's not a thotty. Everyone is all high and saying weird shit. Weird meds, I don't know. Oh, fair enough. Fair enough. And there's quite a bit of people in here for this. Let's should we start a poll real quick? Start a poll. There you go. There's a poll for y'all. For y'all. Coffee's simple for Corey. He doesn't do anything except skateboard. That's actually facts, though. I really don't do anything outside except... Oh, shit. No, my calls! I can't keep doing this. I can't keep doing this, bro. I can't keep doing this. It's funny, but I can't. I'm not in the mood to act right now. I'm not in the mood to act right now. All right, I'll try to act. Down 9%, dude? Oh, I just bet everything on this. How am I gonna tell my wife, bro? How am I gonna tell my wife that I just bet the whole family retirement on him's earnings and lost? No. I don't think that one was that good. I don't think I can't. I'm not acting guy right now. I'm not acting guy right now. I'm just not. I don't know, rate that. Rate that. Give that a rating. I think it's pretty low. I think the rating's pretty low. But I thought the Carvana one wasn't that good, and that turned out blowing up. You don't like coffee, you hit them with the whole, can I please have a mint chamomile tea, please, with 4 packets of honey? That sounds disgusting, dude. What? That sounds disgusting. Mint chamomile tea? Bro, that sounds filth. That sounds absolutely filthy. Alright, where's this earnings report? They don't even have the earnings report out yet. What a poll. You can't be like, come over and hermit with me till date like 4 at least. Yeah, I don't know. Yeah, I mean, I think I'll probably just ask her name or something and probably just leave it at that. Like, I don't know, bro. But more likely, I'll probably just forget about it again. That's probably the more likely thing that'll happen. Probably just forget about it again. Just go back to not caring, because that's usually the best. Seems to be the best outcome for me, just not caring. Down 9%, dude? Oh, I just bet everything on this. How am I gonna tell my wife, bro? How am I gonna tell my wife that I just... How am I gonna tell my... I gotta stop doing that one. Everything on this. How... Except it's now it's green, so this doesn't even work now. I hate this. Now it's green. This doesn't even work now. You know what? Screw this. Screw this. Now it's red again. I don't even know. I don't even know, man. Where's the earnings report? Here it is. Let's just read this. Oh, it's going down again. Fine, I'll upload the short. Fine. Do we know when the call starts? In like 50 minutes? Something like that. They are all good. I love that you keep losing the house. 5.5 out of 10. All right, solid rating. 1.5 out of 100. Oh, that's a shit rating. That's shit. I don't like that rating. That's a shit rating. Not a big fan of that. Not a big fan of that rating. A 1.5? A 1.5 out of 100? Really? That's a terrible rating, dude. That's what you're gonna give me? I was waiting for you to make fun of the tea. What are we doing? The call started? No, it didn't. Are you retarded or something? Just wondering. You might be a retarded. The call did not start. The earnings report came out, and I'll read that here in a minute. But, I'm trying to upload a stream clip here. How am I gonna tell my wife, bro? How am I gonna tell my wife that I just bet the whole wife that I just bet the whole family. I just bet everything on this. I just bet the whole family retirement on him's earnings and lost. This is so stupid, bro. No. No. I think the little no at the end is what makes it. No. That shit's so stupid. Oh shit, I didn't make it a short. Whoops. Whoopsies, I gotta make it a short. Come on, dude. There we go. There we go. Alright, let me export that shit. Sorry, I'll read the report here in a minute. I'm busy. Trying to get this stream clip up for all the haters. For the haters. Don't you worry your pretty little head. I'll read the earnings report. Don't you worry your pretty little head. I'll be getting to it. There's just more important matters. Wait, what? What the hell just happened? I don't think that exported correctly. Down 9%. Bro, what the fuck? Why did it... So annoying. And I delete it. Bro, come on. Come on. Alright, let me read the chat real quick. You are not cultured, men of culture. Let's leave this chat and have some crumpets with our mint chamomile tea. So casual. Just ask her name and then start counting down from 5 to 1 and walk away slowly. Please. That's what you want me to do? Just ask her name and walk away? Okay. I don't feel like that's gonna go well, but... Why? Oh, it's because I'm an idiot. Okay, that makes sense. That makes sense. When you're an idiot, you know, there's a reason why things don't work out. Alright. Alright, I figured it out. Don't worry. Don't worry. Don't you worry. Fuck. Ugh. I'm so frustrated right now. I can't even edit this simple video. There we go. I did it. Wow. It's a miracle. Actually edit a video. Look at it. Look at the video editing. Killed it. Absolutely killed it, man. Wow, I did it, chat. I did it. Alright. Let me catch up on chat. And... Do you have an MBA? I look like a stoner? What do I need an MBA for? Probably a better trader than most people who have MBAs. Actually, I guarantee you I'm a better trader than most people with MBAs, so what does that have to do with anything? College is a fucking scam. Ask if she's into cool things like stocks. I don't think women like stocks. Busted chair well beforehand and go nuts smashing the chair if they bought PayPal would be hilarious. Alright. You should have banned this guy, Moose. This guy's too retarded to wait for an earnings call for some reason. I like stocks. I am woman. I like stock. I am woman. I woman. Alright. Let's read the earnings call for the little babies who have no patience. Here, you little pussies. I'll read you your little earnings report so you'll stop crying. Alright. Hims and Her Inc. report fourth quarter and full year 2025 financial results. Revenue of approximately $2.35 billion, up 59% year over year. Net income of $128 million. Adjusted EBITDA of $318 million. Subscribers grew to over 2.5 million. Provides Q1 and full year 2026 guidance with full year 2026 revenue in the range of $2.7 billion to $2.9 billion. And adjusted EBITDA in the range of $300 million and $375 million. Hims and Hers, the leading health and wellness platform, today announced financial results for fourth quarter and full year ended December 31st, 2025, in a shareholder letter that is posted at investorshim.com. More than 2.5 million subscribers now rely on us for a healthcare experience that is both accessible and deeply personal, and we believe we're well on our way to becoming the global leader in consumer health. We made it possible for customers across the world to depend on us for access to care across an expanding range of conditions, from launching hormone therapies and diagnostics introducing labs to unlock deeper health insights, and taking meaningful steps to grow internationally. The investments we are making today position us to set new standard in healthcare for people everywhere. The continued growth and diversification of our platform is helping to create a world where proactive, preventive, and personalized care can feel like a luxury without actually costing like one. Our financial results in 2025 demonstrate the power of scaling a deeply personalized consumer health platform. Revenue grew 59% year over year to $2.35 billion. So we expanded our subscriber base and increased engagement across specialties by bringing new sources of value to millions of customers. With a strong balance sheet and robust operating cash flow from tenured specialties in our domestic operations, we have flexibility to invest in scaling new specialties, advancing our technology and infrastructure, and expanding internationally, all supporting our path toward our 2030 targets of at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. Let's see, revenue was $617 million for fourth quarter 2025, compared to $481 million for fourth quarter 2024. Gross margin was 72% for the fourth quarter of 2025, compared to 77% for the fourth quarter of 2024. Net income was $20.6 million for the fourth quarter of 2025, compared to $26 million for the fourth quarter of 2024. So they're losing net income. That's probably not positive. Adjusted EBITDA was $66.3 million for the fourth quarter of 2025, compared to $54.1 million for the fourth quarter of 2024. Net cash provided by operating activities was $61.3 million for the fourth quarter of 2025, compared to $86.4 million for the fourth quarter of 2024. Free cash flow was negative $2.6 million for the fourth quarter of 2025, compared to $59.5 million for the fourth quarter of 2024. That sounds like trash, bro. This sounds like a terrible business. Full year financial highlights. Revenue was $2.3 billion for the year ended December 31st, 2025, compared to $1.5 billion, basically $1.5 billion, for the year end December 31st, 2024. So their revenue is going up, but their net income is going down. So I don't really view that as positive personally. Gross margin was 74% for the year ended December 31st, 2025, compared to 79% for the year ended December 31st, 2024. Net income was $128.4 million for the year ended December 31st, 2025, compared to $126 million for the year ended December 31st, 2024, which was impacted by the change in valuation allowance of $68 million due to the release of the valuation allowance on our domestic deferred tax assets, partially offset by tax activity for that period. That's not that bad, I guess. Adjusted EBITDA was $318 million compared to $176.9 million. Net cash provided by operating activity was $300 million compared to $251 million. Free cash flow was $57.4 million for the year ended December 31st, 2025, compared to $198.3 million for the year ended December 31st, 2024. Yeah, that seems like a big decrease in free cash flow. That doesn't seem good. That doesn't seem great. Hims and Her provided following guidance. For the first quarter 2026, we expect revenue of $600 million to $625 million, adjusted EBITDA of $35 million to $55 million, and adjusted EBITDA margin of 6% to 9%. For the full year 2026, we expect $2.7 billion to $2.9 billion, adjusted EBITDA of $300 million to $375 million, reflecting an adjusted EBITDA margin of 11% to 13%. Yeah, this is going to be new for me. I've never called into an earnings call. That's going to be new. That's going to be new. I assume this is all just the same things we just read. Yeah. Literally just the same things we read. Oh wait, maybe they'll have a webcast. Hopefully they'll have a webcast. Okay, cool. They have a webcast. Thank God. Thank God. Thank goodness. I thought I was gonna have to call in. That would have been crazy, dude. If I had to call in, I think that would have been crazy. Okay, thank God. Thank God, chat. I really did not want to call in. Alright, what's going on in the chat? Do. Why would anybody take investment advice from a guy who can't operate his computer properly? Because he makes more money than you investing? That's probably why. Because he's a better investor than you? Why are you in my stream criticizing my mistake on a computer? Are you like an idiot or something? Do you never make mistakes? Are you just perfect? Little Miss Perfect over there? And I don't give a fuck if you listen to me for investment. I don't even give investment advice. I tell people to buy GameStop because it's a solid business, but I don't give investment advice because I'm not a fucking loser. I don't have a course to sell you. You're unnecessarily rude and nasty? No, that's okay. That's okay. Maybe if there weren't a bunch of idiots in my chat, I probably wouldn't be rude and nasty, you know? Maybe if there was like actual like positive chill people in my chat and not a bunch of crybabies whining that their little stock is down, talking shit for no reason, you know, maybe I'd be nicer. But if they're just a bunch of people talking shit in my chat, I'm gonna talk shit too. Crazy, huh? Crazy how that works. I can hardly wait till this earnings call starts. Hey, I appreciate you, Stuart. Much love, Stuart. Appreciate you, bro. What's for dinner? Oh, I don't know. I don't know. What are you making? What are you making, my friend? Don't call me a baby. I wasn't. I was referring to everyone else. Do I have stock in the company? No. I just buy GameStop. I'm not interested in small companies like this. I just report the earnings for the people out there because there's a lot of people who like these earnings calls. So I just do it for the people. Why did I choose this company? Because I know it has a following. I didn't think there would be this many people still following it after losing 60% of the value from all-time highs, but I just knew this stock had a following. Let's go, GME. Can't stop, won't stop. Amen, amen. Amen. Ryan Cohen, bro. Ryan Cohen's the best investment next 5-10 years, in my opinion. Possibly even longer. I think Ryan Cohen's gonna make me a multi-millionaire. Just, you know, how long is it gonna take? That's definitely up for debate. Definitely up for debate, but I still think Ryan Cohen's gonna make me a multi-millionaire with time. Best CEO ever. Can't go wrong when you're side with him. We'll see. We'll see. You know, I'll never say it's a for sure bet, but I'm very confident in it. We're at by September and by end of year. Yeah, it'll be interesting. The warrants expire relatively soon. About 8 months. 8 months and like a week. If we're not above $32, I mean, either way it's positive. You know, whether you're above $32 or below $32, I think it's positive. How many GME shares do you have? Not enough, but a lot. I've got like, I don't know, over 11,000 or something like that. I don't know the exact number. It's somewhere around 11,000 though. Spread out between a few different accounts. Not enough though. Not enough. I wish I had more. I wish I had money to buy more. If I'm just being honest, because I would. Ron. What's up, Ron? How you doing, bro? Hope you had a good weekend. Hopefully everyone had a good weekend. Sell some and get some flowers for homework or a bucket of Olays. Wait, what? Flowers for homework? What are you talking about? I ain't selling shit. I ain't selling nothing, bro. I will never sell, Kristen. I will only buy more. Oh, I'm not buying her flowers. That would be creepy, bro. I feel like that would be creepy. I'm not doing that. I'll probably do, you know, I'll probably ask her name and then never talk to her again, like most girls. That's going to be the most likely outcome, I can tell you. I'm lolling, imagining the balloons. Free balloon day. We stole a balloon. Oh. If you can't do the crime, don't do the time. But we stole a balloon on Free Balloon Day. We stole a balloon. You're about to ask her name and you just start floating up. We're not in Alice in Wonderland. This isn't Alice in Wonderland, bro. One pill makes you smaller, and one makes you... Or wait, I did it backwards. One pill makes you larger, and one pill makes you small. Chasing rabbits. If a dude came to the gym with some balloons, I'd definitely marry him. Fucking Kristen. You know, Kristen, I used to depend on you for some nice, honest, real answers. But that doesn't exist anymore. She's gone, bro. She's far gone. Ask her out for ice cream after losing 1,000 calories. Great moves, great moves. I'm like, hey, you want to go eat a rice cake together? It's only 35 calories. You want to eat some rice cakes? Get some keto bread? I'm trying to help, but you don't get out of the house. I get out of the house. I go to the gym like every day. Want to share a rice cake? Holy shit. Oh. Hey, baby, you want to share a rice cake? Wow, that's fucking awesome. Oh, yeah, seaweed. Hey, baby, you want some of my seaweed? It's all crunch. I'm like over there crunching on the seaweed. Hey, you want some seaweed? Would you like some seaweed? Just ask her name, say you think she's cute. If she blushes, ask her number. If she looks at you like a tard, find a new gym. Well, I'm not finding a new gym. I'm not doing that. I won't care if she looks at me like a tard. That's probably most people. That's not anything from normal. So that's not a big deal. You want to share a rice cake? Put a scoop of ice cream on a rice cake? Ew, that's disgusting. That's disgusting, Ruben. That sounds so bad.
Thank you for standing by. My name is Eric, and I will be your...
Wait. Did the how is the... Oh, that's third quarter earnings. What? I was wondering what was going on there. It was third quarter. There we go. Okay. I messed up. That was my bad. I had the third quarter earnings call up the whole time and didn't even realize it. Nobody in the chat said anything. Which, not surprised. Not surprised. Don't worry, chat. I'll do everything. Don't you worry, chat. I'll do everything. Don't you worry your pretty little head. I'll do everything, chat. Okay. I figured it out. We got there. I lost money. No. Say it's not so. Don't lose money. If this turned into a restraining order, your health might take a plunge or you might need some hymns. Nah, I'd be fine. I've been rejected so many times. So I just like it wouldn't even faze me, honestly. That's literally the outcome I expect is to get rejected, so not really a big deal if it happens. Greg was screaming about how right he was somewhere. Yeah, that guy got banned, so. Only for 24 hours, though. I didn't fully ban him. I should have. I don't know why none of y'all are jumping on Nokia. Probably because it's trash. It's probably why. Is Nokia any good? Or are you just talking? Because I really doubt Nokia is any good. It's not even... I can't even research it because of some foreign dog shit. Next time she walks by you, tell her to stop stalking you. Do you think we're in a Great Depression? I mean, I'm greatly depressed, but... No, I don't think so. I might be in a Great Depression. I Did It for the Nokia is a good song. That's an actual song. I know something you might remember. What kind of car do I have? I actually do know this one. Am I supposed to say it on stream though? Isn't it a Jetta? The Jetta? The Jetta? Of course I remember. A Ferrari. Yeah, she got that brand new electric Lambo. That brand new electric Lambo. You sold her? No. Why? Why'd you sell it? Sold your GameStop, you sold your Jetta. You're selling all the good things. Selling all the good things. You sold me? Shit. Clutch went out. Ah, that sucks. What'd you get? What kind of whip did you get? What kind of whip are you whipping now? Kia Soul? Just kidding. Got that Kia Soul? 26 Camry XLE. Damn, you bougie. You bougie. She like, I don't want the XE. I'm getting that XLE, bitch. Or wait, it's the SE. The SE's the cheap one. That's a fire car, bro. That's a fire car. I'm jealous. I'm jealous. I love Toyotas. Or Camrys especially. Camrys are so nice. Camry has to be like the nicest, like low mid tier card or car. It's too big compared to my Jetta. That's why I like it, bro. The Camry has the best leg room, and it's like the smoothest ride ever. Such a nice car. Such a nice car. Didn't you recommend that last week? Oh yeah, I love Camrys. I think they're the nicest car you can buy. Trying to race for pink slips. Is that a hybrid? I don't think Camrys are hybrid. Oh, I think you can get a hybrid Camry, but I don't think. I think it would be specifically a hybrid or something. I know they have hybrid, or I'm pretty sure they have hybrid ones, but I don't think most of them are. No shit, you recommended it? Yeah. Oh, it is a hybrid? Alright, I stand corrected then. I stand corrected. Maybe the X part of it is hybrid? I don't remember. I don't remember how they're categorized. Hey, thank you, Ruben. Thank you, bro. All right, we're in there. We're in there. We didn't have to call in. Thank goodness. We're in on the earnings call, and we didn't even have to call in. Make sure you guys share the stream. Share it on Twitter, whatever social media sites you have. So, yeah, share the stream. Hit the like button as well. If you can't share the stream, at least hit the like button. I'd say that's fair. If you're not going to share the stream, at least hit the like button. I feel like that's fair. Probably got some fancy plate too. Maybe it says GMEBBY. I don't know. I don't love the hybrid thing where it shuts off. Freaks me out. Can't tell if it's running. That's still cool though. That's still cool. I'm jealous. Maybe one day. Maybe one day you'll give me a ride in the cam. Probably not, but maybe one day. I fucking love Camrys, bro. Yeah. It's on the screen, Jared. $15. I'm in IT, and even the techie stuff is a lot for me. Super used CD players and Bluetooth and most. And the like button. Appreciate you. Grill in the front, sweet. Yeah, those XLEs are nice. I mean, any Camry is nice, but obviously the more updated versions are a lot nicer. I think the XLEs come stock black on black. Heated steering wheel? Damn, you're bougie. You bougie over there with your heated steering wheel. This earnings call should be starting here soon. We're just waiting. We're just waiting. Weird driving an automatic. It's more chill. It's definitely more chill. Safer though. I think driving in manual's safer, personally. I think you have to pay attention more while you're driving. And also, if you actually are like good at manual, you can kind of slow down without braking, really. So I would say manual's safer to drive. Drink it all at once. Professional degenerate. Never driven a manual, really? Interesting. Interesting. I think manuals are some boomer shit. I grew up on manuals, so. But fuck, I haven't driven a manual car in a long time. One time I slammed my friend's face into her dash because I was driving her automatic and slammed the brake thinking it was the clutch. That's awesome. Never seen anything more than the paddle shifter. Go try to drive a manual sometime. It's pretty fun. It's a good time. I'm a millennial. Not anymore. You got upgraded to boomer. It's amazing how many people can't drive a standard. I mean, it's just not common anymore. Used to be relatively common, but now there's not many brand new cars that are coming out with manual. Not many. Like Volkswagen, pretty sure Volkswagen's the only one who does or still does it. I'm sure there's another, but just like thinking off the top of my head, I think Volkswagen's the only one who still makes manuals. The GLI does? Isn't that Volkswagen? Yeah. Mustangs are manual? Really? Jeep still does? I didn't know that. I didn't even know Jeep had manuals besides like really old ones. Volkswagen isn't the only one. Well, who else does it then? Instead of criticizing, bring value to the stream. You saying Volkswagen isn't the only one brings no value to anyone. Maybe try like the other people in the chat. Maybe try saying which ones still do it instead of being an idiot. Crazy, huh? Crazy. Most of them are getting rid of them. That's why it's like whatever. Yeah, it's a lot more chill. It's a lot more chill. Camaro's manual too, and I think some scats. Bet they're gonna be vintage at some point. Might have been worth more money. I mean, not really. Yes and no. Be cheaper to fix, but that's probably about it. I have an 18 Jeep Wrangler with a standard. Really? Wow. Yeah, I didn't know Jeep even did it still. Old Subaru WRX manual cars look cool. Yeah, the Subus are nice. The WRX. I like WRX. Acura, Honda, and Subaru. Well, there you go. Was that so hard? But there's like what, 8 cars in each of those categories of cars. So still not very helpful though. Subus are for boomers and lezzies. The WRX is nice. I mean, I like Subarus. Subarus are dope. Especially if you live somewhere like where I live, where it's having that 4-wheel drive is nice. A lot of Subus in Minnesota, really. My mom has a Subaru, constantly make fun of her. Well, that's rude. You should be nice to your mom. Camry's all-wheel drive, which is cool. Yeah, that is cool. That's really cool, actually. I feel like most sports cars you can still order them with standard, but you're right. Probably about 90% of cars today are automatics. Subarus are king of the snow. I'm from Maine. Oh, welcome, Andrew. Welcome, bro. I don't think I've actually ever driven a Subaru. It's just I can only imagine having 4-wheel drive on a car. That would just be nice. I told her only Leslie's drive him. She laughed. Oh, fair. That's fair then. Alright, this earnings call should be starting any minute now. So, share the stream. If you can't share the stream, hit the like button. Should be starting any minute now. I hiked 17 miles in Maine in the fall. Beautiful. 4 falls ago. 17 miles? Damn. Damn. That's a lot of miles. That's a lot of miles. Did you know I walked 1,000 miles? Where's this earnings call at? Should be popping up. Yeah, thank you, Danny. Appreciate you being here. Appreciate you being here. A lot of people bullish on this stock, apparently. 343 votes is quite a bit. I think it's crazy people are still bullish after how much it's gone down. Kind of interesting. Usually people are bearish after a stock like that drops as much as it has. But not this one for some reason.
If you would like to ask a question during that time, simply press star, then the number 1 on your telephone keypad. I would now like to turn the call over to Bill Newby, Head of Investor Relations. Bill, please go ahead.
Good afternoon, everyone, and welcome to the Hims & Hers Health fourth quarter and full year 2025 earnings call. Today, after the market closed, we released this quarter's shareholder letter, a copy of which you can find on our website at investors.hims.com. On the call with me today is Andrew Dudum, our co-founder and chief executive officer, and Yemi Okupe, our chief financial officer. Before I hand it over to Andrew, I need to remind you of legal safe harbor and cautionary declarations. Certain statements and projections of future results made in this presentation constitute forward-looking statements that are based on, among other things, our current market, competitors and regulatory expectations, and are subject to risks and uncertainties that could cause actual results to vary materially. We take no obligation to update publicly any forward-looking statement after this call, whether as a result of new information, future events, changes in assumptions, or otherwise. The risks, uncertainties, and other factors that could cause actual results to differ from our forward-looking statements are described in our earnings release and SEC filings. Please see our recent earnings release and most recently filed 10-K and 10-Q reports for a discussion of these risk factors as they relate to forward-looking statements. In today's presentation, we also have certain non-GAAP financial measures. We refer you to the reconciliation tables to the most directly comparable GAAP financial measures contained in today's press release and shareholder letter. You can find this information as well as a link to today's webcast at investors.hims.com. After the call, this webcast will be archived on the website for 12 months. And with that, I will turn the call over to Andrew.
Thanks, Bill. Good afternoon, everyone, and thank you for joining us today. I'm excited to tell you about the tremendous progress we're making at Hims & Hers. This starts, as it always has, with our fundamental belief that everyone should have access to the highest quality of care available, customized around each person and their individual needs. Today, only the wealthiest in our society can expect this level of care. By continuing to put the customer at the center of everything we do, we are changing that. Our teams are pursuing this vision every day across an expanding set of specialties. We have proven that access to care doesn't need to be limited by privilege, prices don't need to be prohibitive, and customers don't need to settle for a one-size-fits-all approach. We believe GLP-1s are a case study in how medicines are coming to market differently. The dynamics we've seen over the last 18 months, including US prices for injectable GLP-1s falling more than 80%, reflect a broader disruption happening within the United States. Customers are demanding better access, more direct engagement, and prices that align with other regions around the world. That pressure is forcing a long overdue conversation. How do we use today's technological advances to help more people feel great? We see this moment as the early stages of a new model that actually works for everyday people. Netflix and Spotify reshaped how people could access not only a broader range of content, but also the best the industry has to offer. Healthcare must evolve toward that same consumer-oriented distribution model. That evolution will demand creativity and new commercial frameworks where consumer platforms and drug makers work together to help people get healthy. Our platform puts us at the forefront of that change. Before ever scaling our weight loss offering, we built a platform that surpassed $1 billion in revenue and achieved profitability by scaling offerings like sexual health and dermatology. Specialties that continue to grow today with strong unit economics that allow us to fund the next opportunities for growth. GLP-1s are an example of one such opportunity and have provided a meaningful accelerant to the business. But they are a single treatment within a single specialty on a broader global consumer platform that is growing stronger and more diverse with every investment we make. At the end of 2025, over 2.5 million subscribers on our platform were benefiting from our pursuit of this vision. As we expand new offerings that can serve our customers as they enter different life stages, we are increasing our ability to build and maintain deep, longer-term relationships. With only a small minority of subscribers utilizing a compounded GLP-1 treatment, it is clear to us the impact of what we are building reaches well beyond a single weight loss treatment. By leveraging the same technological advancements that have completely changed how we experience entertainment, how we travel from place to place, and even how we manage our finances, we are making high-touch, personalized care accessible to millions of people across more specialties and in more geographic markets. No one is better positioned to create a world where more people can access quality care. That is our core belief, and it's one we do not take lightly. We've spent years building operational expertise across each of our offerings, growing customer awareness, and leveraging scale to drive broader accessibility to personalized care. As a result, we can now bring new offerings and markets to the platform more quickly and efficiently than ever before, whether you live in a rural Midwestern community in the US, a large city in the UK, or somewhere in between. To give you an idea of how our speed to market has changed, historically we targeted launching one new specialty every year, and each of these usually required a few years of development before becoming meaningful contributors. Longer tenured offerings like sexual health and hair loss for both men and women took 3 and sometimes even 4 years to eclipse $100 million in annual revenue. Comparing this to how we operate today is truly remarkable. As we've shared in the past, our weight loss offering reached $100 million revenue run rate in less than 7 months after launch, and that excludes any contributions from compounded GLP-1s. Within a span of 3 months in 2025, we launched our new labs offering, as well as hormone therapies with support for low testosterone, menopause, and perimenopause. In just 90 days, we created 3 distinct new entry points to our platform, each addressing large, underpenetrated markets that have been largely ignored by the traditional healthcare system. While not every new offering will scale the same pace as weight loss, early customer success and accelerating customer adoption following the placement of our Super Bowl commercial gives us confidence that each of testosterone, menopause, and labs can eclipse $100 million in annual revenue in the near future. Even more energizing, since launch, we've identified that over 70% of lab customers may be eligible for treatment plans offered through the platform, and more than 95% of individuals utilizing a testosterone support offering experience an increase in testosterone levels within the first 2 months of treatment, with an average increase of over 80%. These three new entry points are not simply new offerings. They are the start to far deeper relationships and value for our customers. These early signals demonstrate our evolution towards providing access to more proactive and preventative care. Insights we glean through our platform can inform an expanding selection of care pathways and can streamline the process for customers to get support where they need it the most. Today, we are addressing areas like cardiovascular risk, metabolic dysfunction, hormone levels, and expect that over time, we'll add areas such as performance, recovery, and sleep. As we accelerate the development of a more comprehensive approach in the U.S., we're also taking significant steps to extend our reach abroad. We see expansion into new international markets as the next logical step in bringing the trusted Hims & Hers experience to more people and to more places around the world. Last year, our acquisition of Zava deepened our presence in the UK and enabled our entry into Germany, France, Ireland, and Spain. More recently, the acquisition of Livewell extended our presence into Canada, one of the first markets that is expected to have access to generic semaglutide. And just last week, we announced we signed an agreement to acquire Eucalyptus, a leading global health innovator. Upon closing of the transaction, we will further strengthen our UK and European presence while also bringing the Hims & Hers brands into new markets like Australia and Japan. I have known Tim Doyle, the co-founder and CEO of Eucalyptus, for years, and have enjoyed watching him and his teams build an innovative healthcare experience that is focused on safe, highly accessible care and puts customers at the center of everything they do. I am confident he is the right leader to make the Hims & Hers experience central to how customers in each of these new markets approach their daily health. The opportunity is significant. We believe that with the deliberate investment and execution, we will have the teams in place to drive category leadership in each of these markets, positioning our international business to scale to more than $1 billion in annual revenue within the next 3 years. This growing presence across both specialties and geographies provides important building blocks for the future of healthcare we are driving. There are 3 key elements to that future, and we are investing across technology and infrastructure to bring them to life. First, innovation in diagnostics and devices will continue to evolve how each person understands their whole picture of health. With our recent labs launch, we are providing customers with over 130 biomarkers across key areas of long-term health. Results are delivered directly within our app, where AI-supported readouts highlight metrics that are already optimized and those that need attention, while also educating customers on both lifestyle and clinical interventions. And with the acquisition of YourBio, we plan to make targeted and condition-specific lab testing more convenient and approachable with technology that can be used in the comfort of your own home. Together, these new services and expanding capabilities will give customers a deeper understanding of their health and help providers make more informed decisions. Over time, we expect to build on this with the integration of wearable technology, like continuous glucose monitors and daily fitness trackers, as well as expanded testing options that bring insights like polygenic risk scores directly to our customers. Second, AI will become a critical layer on top of that data that helps define, refine, and implement precision treatments, interventions, and lifestyle adjustments. Our growing technology and product teams, reporting into Mo Al-Shanawi and Deirdre Kaur, are ensuring that as our offerings expand and deeper insights help uncover areas of need, we are building an experience that makes access to proactive care simple and readily available. We envision customers being able to add, adjust, or switch treatments within a single intuitive platform as their health evolves. At the same time, static and reactive communication is being replaced with proactive, conversational support to guide customers throughout their journey. Early deployments of proactive messaging and weight loss have already driven more than a 50% increase in weight logging frequency, signaling an ability to improve customer commitment and engagement as they progress in their weight loss journey. And behind the scenes, automation is removing cumbersome processes and facilitating administrative interactions, allowing providers to focus on clinical decision-making. The result is faster responses, higher customer satisfaction, and a scalable model that can deliver access to high-touch care to millions of people while still prioritizing clinical excellence. And third, deeper data and more proactive care demand more precise, personalized treatment plans for each customer. Doing that at scale means investing in an infrastructure that can deliver access to personalized treatments and custom formulas that safely bring together pharmaceuticals and supplements. We know treatments should be driven by what's best for the customer, not by what's covered by insurance or what's currently in stock at the pharmacy. We've spent years building the physical infrastructure required to deliver access to truly personalized care at scale. Over the last 3 years alone, we've invested more than $300 million into our facilities, expanding our footprint to over 1 million square feet across pharmacy operations, lab testing capabilities, and R&D supporting innovations like peptide therapies. This foundation allows us to combine quality with broader access and continued innovation so that access to personalized care is delivered consistently across our platform. The first two pillars, deeper data and stronger technology, are advancing across the industry. We believe those advancements demand the third pillar, a scalable way to make the final step in healthcare more precise and more personal. We believe our technology and infrastructure investments put us in a leadership position to bring a more individualized experience to tens of millions of customers, while maintaining the high standards customers have come to expect around the quality of their care. At Hims & Hers, the team wakes up every day motivated to change an outdated healthcare system that has refused to put the customer first. As we work to fundamentally reinvent these systems, we expect to encounter challenges. It takes time for industries to change, but we are navigating this on behalf of our customers. When it comes to ensuring more people have access to the most innovative and groundbreaking treatments and services available, we will continue to fight, holding true to our mission that we can make more people feel great through the power of better health. Pursuit of this mission takes commitment and resilience. That was true at our founding, and it is true today. We will continue to push for better, more accessible care around the world by focusing on a consistent set of priorities, bringing more offerings to our customers with more insights and deeper personalization capabilities, and when appropriate, partnering with leaders who also believe in a better healthcare experience. By investing with conviction across these priorities, we believe Hims & Hers will be a leader in the next era of healthcare, which will continuously evolve to better serve the customer. This conviction underpins our confidence in our ability to push towards our 2030 targets of $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. At Hims & Hers, we are honored to lead the shift towards a consumer-centric system. We feel both the privilege and responsibility to change what people expect from their healthcare. It is why we started on this mission, and it continues to motivate us every day. Thank you. I'll now pass it to Yemi to walk through the financials.
Thanks, Andrew. I'll start by providing an overview of our fourth quarter financial performance before diving further into our outlook for 2026. Our progress in 2025 reflects the increasing scale of our customer-first platform as we continue to expand access to high-touch, personalized care across more conditions, enabling us to build deeper, more valuable relationships with our subscribers. Subscribers on our platform grew to over 2.5 million in 2025 as we continue to execute on our mission of helping the world feel great through the power of better health. Personalized solutions remain a cornerstone of our ability to attract and retain subscribers. Personalized solutions encompass tailored treatments and programs that seek to address key consumer needs and concerns. These needs include tailoring dosing to meet individual patient needs, simplifying treatment regimens by leveraging a single solution to address multiple conditions, improving customer options through alternative form factors, and providing data-driven insights and tools to supplement medical treatments. In 2023, we began increasing investment to expand the assortment of personalized treatments and have seen resounding success. Since the end of 2023, we've added almost 1 million net new subscribers to our platform. At the end of 2025, approximately 65%, or 1.6 million of our subscribers, were utilizing a personalized treatment. The differentiated solutions that we are able to provide not only aid in drawing new subscribers to our platform, but also drive higher retention and customer lifetime value. Incremental insights and data from new offerings like labs, will enable us to better attract potential consumers for treatments across newer specialties such as hormonal support. We believe this will increase subscriber engagement and have already seen early success signals as monthly revenue per average subscriber increased 11% year over year to $83 during the fourth quarter. Continued subscriber growth and deepening engagement are translating into financial success. Revenue in the fourth quarter was $618 million, representing a year-over-year growth rate of 28%. For the 2025 fiscal year, revenue was $2.35 billion, representing a year-over-year growth rate of 59%. Our 2025 results continue to reinforce our conviction that we have a strong multi-year growth runway across three key areas of the business: the Hims brand in the U.S., the Hers brand in the U.S., and an expanding international footprint. Within our Hims brand, we drove year-over-year revenue growth of over 30% in 2025, despite headwinds resulting from our deliberate efforts to pivot away from generic on-demand sexual health solutions. Since 2023, we've introduced several combination treatments within our sexual health specialty that address health concerns such as low testosterone, heart health, hair loss, and vitamin deficiencies. Nearly 500,000 subscribers on our platform are benefiting from these daily solutions, and the year-over-year growth of those subscribers consistently exceeded 30% throughout 2025. Over 2026, we expect to continue this transition. Our expectation is that retention benefits from our daily sexual health offerings, as well as the evolution of new offerings such as testosterone support, will continue fostering robust growth for the Hims brand. Switching to Hers, in 2025, our Hers business continued to display triple-digit revenue growth and accounted for nearly 40% of U.S. revenue. Similar to our Hims business, revenue growth is increasingly driven by deeper engagement across a broader set of women's health needs. Continued expansion in established specialties like weight loss and dermatology is being bolstered by new offerings in menopause support and diagnostics, presenting opportunities to strengthen customer relationships and extend their tenure on the platform. The depth that we are able to provide across a breadth of specialties, making us reliant on no one single offering, is the power behind our domestic business. Strengthened tenured offerings such as men's dermatology, women's dermatology, and sexual health allowed us to surpass $1 billion in revenue, reach adjusted EBITDA and net income profitability, and generate positive free cash flow. This allowed us to aggressively invest in our weight loss offering and add a meaningful growth vector to our portfolio with access to oral and injectable weight loss treatments. Consumers have experienced success with both oral solutions and injectable GLP-1s available through our platform, with a typical consumer reporting average weight loss of approximately 22 and 29 pounds in their first year of treatment, respectively. While GLP-1s have accelerated our trajectory, the majority of revenue and cash flow generation across our portfolio is generated from our non-GLP-1 offerings. Higher margins from our more tenured offerings will be instrumental in providing resources necessary for investment to scale the next wave of specialties, inclusive of weight loss, lab testing, low testosterone, and menopausal support. Our consumer-centric approach has resulted in immense success in the U.S., where revenue grew over 50% year over year to more than $2.2 billion. Our belief is that the value we bring from our approach transcends borders. In 2025, we welcomed Zava and Livell to the Hims & Hers family, and now we're able to serve consumers in Germany, the UK, Ireland, Spain, France, and Canada. International revenue grew almost 400% year over year to $134 million. We expect our international footprint to become a more meaningful portion of our revenue in the future. As a reflection of this importance, we will adjust our revenue disaggregation from online and wholesale to U.S. and rest of world revenue going forward. With that, I'll now turn to profitability dynamics before diving deeper into our balance sheet and future plans for investment. Adjusted EBITDA in 2025 increased nearly 80% year over year to $318 million. Adjusted EBITDA margins on a full year basis expanded nearly 2 points relative to 2024 to 14%. In the second half of 2025, we meaningfully invested to increase the density of our technology talent, scale new specialties, and deepen our policy and safety talent to facilitate the continued expansion of our operational footprint. Adjusted EBITDA was $66 million in the fourth quarter, representing an adjusted EBITDA margin of 11%. Gross margins in the fourth quarter declined approximately 2 points quarter over quarter to 72%, as tailwinds from continued growth in non-weight specialties were offset by growing revenue contributions from our international markets, expenses related to the launch of new specialties, and pressure from the shorter shipping cadences and weight loss that we discussed last quarter. Prior investments in our brand and product suite continue to be a key driver in our ability to drive marketing leverage. Marketing as a percentage of revenue in the fourth quarter and fiscal year 2025 was 39%, representing a 7-point year-over-year improvement. We continue to see acquisition gains in lower cost and non-paid channels, following years of investments in brand campaigns to drive greater top-of-funnel awareness. Additionally, retention improvements across our subscriber base are compounding as we directly address more customer needs with a growing portfolio of personalized solutions and a customer experience that is driving stronger engagement. G&A costs as a percentage of revenue increased 2 points year over year in the fourth quarter as a result of increased international headcount, as well as additional expenses related to the hiring of new leadership talent. On a full-year basis, G&A costs as a percentage of revenue were essentially flat relative to 2024. A similar dynamic was seen in operations and support costs. Technology and development costs as a percentage of revenue increased to 7% for both the fourth quarter and full year. Investment in engineering and AI talent has resulted in modest deleveraging, but we believe the ROI will be substantial as a result of an ability to move faster and elevate our consumer offering. We have already seen early signals, as demonstrated by our ability to bring multiple specialties to market in the second half of 2025, as well as our ability to improve the customer experience and realize operational efficiencies. Net income for the full year increased notably year over year to $128 million, as compared to 2024 net income after adjusting for a tax benefit in the prior year related to the release of a domestic tax valuation allowance. While we expect to maintain annual net income profitability, our priorities continue to center on long-term free cash flow generation. This enables us to expand our operational capabilities as well as accelerate our strategic roadmap, including through M&A. In 2025, we generated $300 million in operating cash flow. Strong cash flow generation from our domestic business, as well as the strength of our balance sheet, allowed us to actively put capital to work across each of our priorities. First, we invested over $225 million into our operations through discretionary CapEx to drive both expanded capacity and new capabilities across our domestic facilities, which now total over 1 million sq ft. Second, in 2025, we entered into agreements to deploy over $330 million in purchase price consideration towards acquisitions that have allowed us to accelerate expansion into new international markets, as well as launch R&D efforts in the peptide space. We believe YourBio, which recently closed in 2026 for approximately $150 million, will ultimately allow us to augment our diagnostic specialty in the future with a painless at-home offering. Lastly, we repurchased roughly $90 million worth of common stock in 2025, with $80 million worth of shares repurchased in the fourth quarter at an average price of $39. In the fourth quarter, we completed our $100 million share repurchase program and have $225 million remaining on the $250 million repurchase program that commenced in November of 2025. After meaningful investment in 2025, we generated over $57 million in free cash flow and ended the year with $929 million of cash, short-term, and long-term investments on our balance sheet. We believe our ability to leverage our financial position and the rigor of our capital allocation framework will position us to rapidly serve a broader set of consumers, placing us on track to become one of the largest consumer-centric healthcare platforms in the world. Our capital allocation priorities will focus on deepening our ability to combine data and insights, thoughtfully expanding personalized solutions, and elevating digital and physical consumer assets to improve the healthcare experience for tens of millions of consumers. In 2026, we expect this to materialize across the following areas. First, we will continue investing in the capacity and capabilities of our operational facilities. We expect investment in these facilities to unlock our ability to respond to insights from labs and eventually wearables with a broader set of personalized treatments. Additionally, verticalization reduces our cost to serve, ultimately allowing us to pass value back to consumers and selectively expand margins. Second, we will continue to invest in new experiences and physical technologies that will allow us to make treatments more accessible for our subscribers. We believe the integration and scaling of YourBio, which uses a virtually pain-free microneedle blood sampling technology, is a great example of this. Long wait times from overcrowded facilities, fear of pain, or an inability to find the time to drive to a facility all serve as barriers that prevent many consumers from obtaining deeper insights into their health. We expect that investments in these areas will ultimately allow us to provide users with the ability to perform blood draws from the comfort of their own home, and AI technology can help orient providers toward the tests that are most impactful for a subscriber at any point in time. Third, we expect to continue investing in technology. We are one of the few platforms that has insights into the patient journey from intent to outcomes, and with labs, this differentiated capability further expands. A world-class product experience, high-quality provider network, and personalized solutions backed with data are differentiating factors for us. We expect these investments to deepen customer engagement and retention, as well as unlock operational efficiency gains over time. Fourth, We expect to continue expanding the network of partners that will further our ability to become a curator of world-class healthcare services. Over the coming years, our ambition is to partner with other companies that share our vision to unlock more value for our customers. International expansion will perhaps be one of our most significant areas of investment in 2026 and the coming years. We recently signed a deal to welcome Eucalyptus to the Hims & Hers family. Upon closing of the transaction, Eucalyptus will complement Zava and deepen our presence in the UK, as well as unlock a model more closely aligned to our domestic business in Germany, Australia, and Japan. Assuming the transaction closes, our expectation is that our collective international business will break even within 12 to 18 months, inclusive of Eucalyptus. Eucalyptus deploys a rigorous capital allocation framework similar to our own. They currently have an annual revenue run rate north of $450 million, and strong execution enabled them to drive triple-digit year-over-year growth in each quarter of 2025, while also maintaining line of sight to profitability. While we do not expect the business to drive meaningful adjusted EBITDA losses, we do not expect to drive meaningful margin expansion for several years in our international business. Across the majority of international markets, we expect to take a growth-oriented approach and focus on reaching as many consumers as possible before focusing on margin expansion efforts, even if that means running certain markets at or near break-even on an adjusted EBITDA margin basis. We saw this approach work in the U.S. and will utilize a similar playbook to progressively expand markets towards margin expansion in the future. This is our largest acquisition to date at up to $1.15 billion of total consideration. The upfront payment at close is expected to be approximately $240 million, with remaining payments for guaranteed consideration and earnouts to be made through 2029. As we have done in the past, we will monitor the landscape for potential opportunities to reinforce our balance sheet to maintain optionality in ways that thoughtfully consider dilution. However, we are prepared to fund the majority of the Eucalyptus transaction with the strength of our existing balance sheet and cash flow generation from our domestic operations through 2029. With that, I will provide an additional perspective on our initial outlook for 2026. Note that these numbers do not include the Eucalyptus transaction. In the first quarter, we are anticipating revenue in the range of $600 to $625 million, representing a year-over-year increase of 2 to 7%. We expect adjusted EBITDA to be between $35 to $55 million, representing an adjusted EBITDA margin of 7% at the midpoint of both ranges. For the full year, we are anticipating revenue of between $2.7 to $2.9 billion, representing a year-over-year increase of 15 to 24%. It is our expectation that 2026 adjusted EBITDA will be between $300 and $375 million. These adjusted EBITDA and revenue ranges imply an adjusted EBITDA margin of 12% at the midpoint of both ranges. Behind our outlook are the following assumptions. First, we expect an approximately $65 million revenue headwind in the first quarter, resulting from the change in shipping cadences in our weight loss business following the shift to 503A fulfillment. For context, in the second half of 2025, this revenue headwind was approximately $40 million. We expect this effect to mitigate as cohorts continue to stack throughout the year. It's important to note these dynamics affect only the timing of revenue recognition and not customer demand or engagement. Demand for weight loss remains strong, with subscribers growing more than 70% year-over-year in the fourth quarter. We expect subscriber growth within our weight loss offering to remain strong throughout 2026. Second, our investment in our 60-second Super Bowl commercial is expected to place additional pressure on EBITDA in the first quarter. This investment played an instrumental part in our ability to educate consumers about our platform, as well as evolve the brand towards being known for proactive healthcare solutions. No change is expected from our framework that calls for a payback period of less than 1 year on marketing spend. We expect adjusted EBITDA margins and revenue growth to scale from the first quarter. Third, our expectation is for several of the newer offerings, such as low testosterone, menopausal support, and labs, to incrementally scale throughout the year. Newer offerings will play a key role in maintaining solid growth for Hims, as well as helping the Hers portfolio continue to scale and reach its first year of $1 billion in revenue. Investment across most offerings will be stage-gated, and incremental investment released as these new offerings hit unit economic and scale milestones. We believe each of these offerings has the potential to drive meaningful future growth and will play a critical role in our ability to obtain our 2030 aspirations. Fourth, investment in our platform's product experience, technology, and AI capabilities are expected to become a larger priority in 2026. We believe we are in a unique position to connect deeper health insights with improved conversational support that is available whenever our customers are in need. Our guidance affords us the flexibility to lean into these opportunities to create a more engaging customer experience from start to finish, driving stronger conversion and retention over time. Finally, international expansion will offer a meaningful driver of incremental growth in 2026. Our initial outlook anticipates at least $200 million in revenue contributions from international markets. This excludes any additional contributions from our acquisition of Eucalyptus, which is expected to close in the second half of this year. Assuming the transaction closes as expected, we would expect additional second half revenue contributions of at least $200 million. Our primary objective in international will be oriented toward growth expansion. While we do not expect meaningful adjusted EBITDA losses, we are expecting newer international markets to run near break-even. We left 2025 with a great deal of momentum that has allowed us to continue bringing new sources of value to millions of subscribers. Our success in the U.S. places us in a position to thoughtfully expand and rapidly scale across international markets such as the UK, Germany, Canada, Australia, Japan, and others. Strong free cash flow and adjusted EBITDA from tenured specialties in our domestic operations will allow us to continue expanding specialties while also concurrently growing our subscriber base across strategic markets. In the near term, we expect many of these international markets to run at break-even, but in the medium to long term, to become meaningful growth and profitability vectors as we optimize and realize economies of scale similar to what we achieved in the U.S. Continued growth in the U.S., combined with the scale of the international opportunity in front of us, reinforce our confidence in our ability to meet or exceed our 2030 ambitions outlined last year, at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. Our success would not be possible without the significant efforts of Hims & Hers employees around the world. I'd like to thank them, our subscribers, and our shareholders for supporting us in our mission to help the world feel great through the power of better health. With that, I will now turn the call back over to Bill to kick off Q&A with 2 questions from our retail community.
Thanks, Yemi. And thank you to everyone who sent us questions over the weekend. First from Jay, who has a question on our growing international footprint. With the acquisition of Eucalyptus accelerating international expansion into Australia, Japan, and building a deeper presence in Western Europe, could you share more about the company's long-term vision and key priorities for global growth over the next 3 to 5 years? How do you plan to integrate Eucalyptus's operations and brands to drive synergies?
Yeah, thanks, Bill. And thanks, Jay, for the question. I think from the beginning, we've always believed that the vision for consumer-centric health was global. When you think about great healthcare, it's a thing that we care about most personally. It's a thing that we care about for our family. And yet, no matter where you are, the US, the UK, Germany, when you talk to actual people, their frustration with the current status quo is consistent. And so, we have really huge ambitions globally. At the core of it is to target the 10 key most critical markets and to win them handily over the next 12 to 24 months. Across acquisitions of Zava and LiveWell, and with the addition of Eucalyptus, I think we have those critical pieces in place. I've known Tim Doyle for going on 4 to 5 years. He's the founder and CEO of Eucalyptus, and have absolutely loved watching that team execute. They're exceptional leaders with a strong shared commitment to the consumer. And so, when I look at the combination of the two, I think we have bold ambitions to see the Hims & Hers brand be unified across all of these major markets within the next year or two, and a North Star of $1 billion plus in incremental international revenue in the next few years as well.
Thanks, Andrew. And the next question comes from the Hims House retail community. What impact do you expect from the regulatory and legal scrutiny on growth numbers for the next few years? How will you reduce risk from a potential ban on compounding GLP-1s, and what categories are positioned best to pivot the business away from GLP-1s?
Yeah, it's a great question. I think that maybe to step back a little bit, when I founded the company nearly 10 years ago, the vision here, was not to launch treatments on a website. It was to disrupt how customers have access to great care. And I think that opportunity today is just as strong as it was nearly 10 years ago. When we first launched, for people that have been following us, people used to call us the Viagra company, right? We were an ED-only business. And for years and years, that was the headlines, that was the concern, the dependency on Viagra, that category. And then as we progressed and we launched the Hers business and that was getting started, people started to worry, hey, maybe this is a Hims-only business. Maybe Hers doesn't have the ability to replicate itself and scale as well. And now that business is, achieving this year, hopefully $1 billion plus in revenue. And I think the reality is Hims and Hers has always been and continues to be more than one treatment. When you look at the business today, it's important to remember that the majority of our revenue and profitability is driven by offerings outside of weight loss. And really, the amount of patients actually on the compounded GLP-1s is actually quite a small minority of the aggregate subscriber base. And so when referring to pivoting the business to manage the dynamics in the ecosystem, I don't really think that's how we feel about things internally. I think we plan to continue to operate like we always have, which is expanding the offering systematically to patients, broadening the assortment on the platform and the care that we can offer them, deepening our relation with them, deepening our understanding of them, expand into new categories like labs and menopause and low T, work on innovation and R&D for future categories like peptides, which we're working on right now, and ultimately add more value to customers' life in an expanding set of markets. I think between our existing diverse business lines, the pace of the new expanding categories that I touched on in the pre-recorded remarks, as well as now this accelerating international business, there's just really never been a point in our company's life where we've had such a durability in growth engines to achieve the much broader vision for the business.
Thanks, Andrew. And with that, I will pass it back to the operator, and we can begin the regular way analyst Q&A.
At this time, if you would like to ask a question, press star, then the number 1 on your telephone keypad. To withdraw your question, simply press star 1 again.
What's up, Rosh?
We kindly ask that
Hope
you
you're
limit
doing
your
good.
questions to 1 and 1 follow-up for today's call. We will pause for just a moment to compile the Q&A roster. Your first question comes from the line of Maria Ripps with Canaccord. Please go ahead.
Great. Thank you so much for taking my questions. First, I just wanted to ask about your U.S. weight loss business, maybe expanding a little bit on the last question, sort of given all this sort of maybe increased scrutiny around compounded GLP-1s, how should investors think about sort of the durability and maybe growth profile of that business kind of over the next few years? And then secondly, maybe more broadly, how is your marketing mix sort of evolving as you expand into sort of broader, less stigmatized health categories domestically? And are you seeing sort of structural improvements in CAC and lifetime value sort of as your brand matures?
Yeah, great question, Maria. I'll maybe answer the first part and let Yemi handle the second. I think when we look at the weight loss business domestically, there's an increasing range of assortment, which I think is really important. And we follow what is important for the patients. When you look at both the next generation therapies that the major drug companies are bringing to market, when you look at the pipeline of biotech in phase 2 and phase 3, we deeply believe that in the next 2 to 3 years, there's going to be a dozen or maybe 24 added treatments that are going to make a big difference in people's lives. And for us as a platform and for our patients, we deeply believe that assortment matters. And so I think we will continue to adjust the model as necessary to ensure that we have the breadth of assortment that patients need and want. As Yemi shared in our remarks, before we even had the compounded GLP-1 business line, our weight loss offerings was the fastest category to ever launch, just with our combinations of therapies focused on conditions around metabolic and insulin-resistant dynamics. That business scaled to a $100 million run rate in just 7 months. And so we believe there's a really durable weight business, even if you think kind of in a draconian scenario, of compounding GLP-1s not being there. And I think even more so when you look into the next year and two, there's an expanding assortment of therapies that I think are going to be very important to patients. And we're going to have to keep evolving that offering and category, just like we do in other categories, to make sure that we've got great treatments that patients are really looking for.
Then to hit the second part of your question, Maria, just around how we see acquisition trends evolving. You see some of this in the marketing leverage that we were able to gain that was quite substantial in 2025. Really what we are seeing is that we are benefiting from the breadth of treatments that we're able to offer on the platform, as well as the investments we've made historically around really communicating to consumers the power of the platform. I think with that, we view that gives us a competitive edge on the acquisition front. And then what we do see, particularly as we enter newer specialties like labs, will enable us to provide more insights to consumers as well as move towards a world that's more oriented around proactive care. Our view is that carries immense potential to further drive acquisition efficiency. What we observe on the LTV front is that as we are able to help our providers on the platform pair consumers with personalized treatments that really are unique and meet their needs, that effectively drives stronger retention across the platform, whether that's, as we talked about in the prepared remarks, addressing multiple conditions through more simple mechanisms or helping users balance both efficacy with side effects or providing alternative form factors. We see all of those things as well as the ability to leverage more and more insights to help providers pair consumers with those treatments, driving stronger retention, which ultimately drives stronger lifetime value for the consumer.
That's very helpful. Thanks very much.
Your next question comes from the line of Justin Patterson with KeyBanc Capital Markets. Please go ahead.
Great. Thank you. Good afternoon. I wanted to talk a little bit more about some of the investments you're making. It sounds like between AI, labs, and wearables, you're creating the conditions for a flywheel down the road. But I would love to hear a little bit more about just how deep you're looking to go into the wearables ecosystem, how long we should really think about the investments to support some of these initiatives, and how we should think about labs, the steps to scale up labs over the next year or so. Thank you.
Yeah, thanks, Justin. I think those three buckets are a real focus for the business. And I think when you step back, there's just never been an easier way to collect more advanced data from patients across these things, whether it's wearable devices, whether it's polygenic risk scores that you can do a swab on the inside of your mouth, whether it's cancer testing or it's full gene sequencing. It's just really incredible. And so as that accelerates, and our investments in your bio accelerate, and we're able to get testing at home for cheaper costs, we'll be verticalizing that infrastructure so that you, as a member of Hims & Hers, can be getting access to this type of data collection on a really frequent basis. I think that intelligence layer to then help understand how we get ahead of what you are struggling with or what you may struggle with in the future is going to be an increasingly important part of the business. And so this is where I think the platform really transitions from focusing on a single treatment to proactive preventative care. I actually think that type of care is in and of itself a new category for Hims & Hers. It's almost a longevity category, so to speak. But I think as people start to realize a platform like Hims & Hers gives you access to what the 1% have and lets you take the necessary steps to get ahead of it, it's extremely empowering, right? And so we are going to go deep in all three of those areas. From the device side, either through our own or through partnership. We've obviously already acquired our own blood testing device, through our own AI efforts and teams, which we've already started to launch with the labs efforts. And it's starting to pay off, right? When you look at the prepared remarks, we shared that 70% of people who do a lab test on the Hims & Hers platform identify an area of risk that is treatable on the Hims & Hers platform, right? Most of the time, this is something patients are learning for the first time, that they're pre-diabetic, that they're at risk of cardiovascular disease, et cetera. And so there's a massive flywheel in making the entry point in data collection and learning about your health extremely low and extremely easy to get started, and then ultimately build value over the long term with these patients as we expand our care and can have a more comprehensive look at their health.
Yeah, I think what I'd add to that, Justin, is I think similar to what we've done in the past, like we will be thoughtful and continue to stage gate the investment. I think much of what we're investing in kind of follows the four pillars that we've always spoken around, which is like the brand, the investment in technology and data that reinforces the personalization and unique products we're able to deliver, as well as just the strength of our provider network. And so I think that what you see now is a very vast balance sheet as well as strong free cash flow that's enabling us to make the transition that Andrew mentioned towards a platform that is more oriented around leveraging data to treat consumers proactively. Ultimately, we think that these investments, as they start to come together in 2026, in outer years, have the ability to quickly have positive ROI and ultimately pay off for themselves and become self-funding. whether that's in the form of higher lifetime values that we discussed around the last question, or even just with proactive care, being able to unlock new insights to consumers to drive better acquisition efficiency through lower cost channels. Those are all mechanisms that we'll monitor and continue to lean into, that ultimately we believe have the ability to effectively make these investments pay for themselves very quickly.
Great. Thank you both.
Your next question comes from the line of Craig Hettenbach with Morgan Stanley. Please go ahead.
Yes, thank you. For some of the legacy core offerings, can you just talk about which categories you expect to kind of drive growth in 2026? And then within weight loss, is there a range that you're embedding into guidance for this year?
Yeah, thanks for the question, Craig. Maybe I'll start. I think increasing just the concept of, just want to caution the concept of core, versus non-core is becoming increasingly less and less relevant. I think that how we're orienting the business is because the lines across specialties are blending more and more, is really around the concept of international and domestic. And then underneath that, what you do see is you have businesses of varying tenure. We see a lot of potential in both the Hims and Hers specialties, for continued growth. I think we were excited to see the Hims brand grow 30% year-over-year in 2025. And we do believe that we're positioned for continued growth, whether that's in the form of newer specialties like testosterone that are rapidly emerging, or even as we start to see the benefit from the stronger retention on the daily health offerings, in both sexual health and greater assortment in other categories like hair. Each of these disciplines has the ability, within the Hims specialty to continue to power growth. And then flipping to Hers, we're seeing, very much the same element. Historically, newer categories that we've launched have taken, 12 to 18 months to scale. I think that as we look at around things like labs, menopausal support, as well as some of the tenured categories like Hers Care, we continue to see robust growth across many of those, and I think we'll continue to invest in those. But as we make the transition that Andrew mentioned, previously in both his prepared remarks and in the question, we're able to proactively serve consumers. I think that's going to be a pretty substantial unlock that will provide the ability to, for us to continue to see our tenured specialties grow.
Got it. And then just as a follow-up, when I think through the 2030 target and kind of the path to 20% margin, you commented a few times international is kind of break even and there's some investments there. So is there anything around kind of the U.S. business or efficiencies that are helping to potentially offset some of the drag on international just from a margin perspective?
Yeah, I don't think that the drag on international is going to necessarily be permanent per se. I think that what we will do, and I think it's almost going to be more on a market by market basis, we will look at the opportunity in front of us. I think across most international markets, the orientation will be a growth orientation. I don't know that the international universe necessarily will be static for us as well as we continue to utilize our current assets as well as the Eucalyptus team to launch in new markets. Newer markets will tend to probably carry a more challenging margin profile. But then as we look to markets that season over the next 2 to 3 years where there's already a strong presence in, there's the opportunity to start to see some margin expansion as you get 2, 3 years out. And you kind of, if you look at the history of the U.S. and as we made the transition from a loss-making business on our domestic operations to profitability, the ramp in margin as we were able to realize economies of scale kind of from 2022 to 2023 was fairly rapid. And so I think our expectation is on a market by market basis, there'll be a similar concept in the international markets. And then as we look to the domestic operations, we are investing fairly aggressively in a number of newer tenured specialties. As those specialties hit their milestones and stage gates, we'll continue to invest. But what you also do see is on a specialty by specialty basis, the spread between the tenured specialties and the newer specialties, the margin profiles start to converge. And so I think between that and the domestic operations, as well as on a market by market basis, international markets kind of in the latter half of this decade becoming more and more margin accretive. We view that as the path to hit our goals of $6 billion in revenue and $1.3 billion of adjusted EBITDA.
Got it. Thank you.
Your next question comes from the line of Eric Percher with Nephron Research. Please go ahead.
Thank you. Andrew, I'd like to ask your perspective on the composition of the international business as we look out a year, both across Zava and eucalyptus, in terms of the specialties or personalization. And then I know you had this line about becoming a leading provider of branded GLP-1 medications. Is that as simple as what we see running through Juniper today? And how do you think about maintaining relationships with the brand manufacturers?
Yeah, that's a great question, Eric. I think the composition overseas will likely mirror eventually as it matures the U.S., right? I think there's a lot of category expansion overseas, and each of these businesses that we are integrating in have different focuses in different markets, right? The Pilot brand in Australia, very focused on men. The Juniper brand focused on women and weight. Ultimately, we think that it will probably converge to have really nice diversity at scale. I think overseas, the relationships with our international teams and the branded pharmaceutical companies is quite strong because there's really consistency. They've got great rapport. They've been able to be a large consumer distributor to them. I would expect that to maintain and stay consistent. We don't expect to change that model. I think that's the winning model overseas, and would expect it to remain so.
Thank you. And just to follow up, was the comment on the majority of the business being non-weight loss, both for revenue and was it free cash flow or cash flow?
Yeah. The comment was just around the majority of our revenues are actually coming from outside of the GLP-1 business, today. And then you can just translate that from, the tenured specialties carrying a more robust margin profile from economies of scale. The adjusted EBITDA or the margin profile tends to be stronger on mature categories as well.
Thank you.
Your next question comes from the line of Mark Mahaney with Evercore. Please go ahead.
Thank you. I just want to ask two questions about both the fertility opportunity that you're seeing and labs to date. You've talked about them both in the past. Can you just give us more of an update on the data points that you're seeing and how you think about those opportunities? Thank you.
Yeah, thanks, Mark. We've yet to launch anything on the fertility space. We have launched in the last couple of months the menopause, perimenopause, and low T, as well as labs. Those kind of happen side by side. So far, I would say just, nearly 10 years of testing out go-to-market strategies, I would say we are incredibly encouraged by the early data. I think we believe that each of those three have near-term opportunities to scale to a $100 million run rate, just like many of our other winning categories. We also see that the actual engagement with the experience from a consumer standpoint is a very high-value engagement. On the hormonal side, men are seeing massive increases in their testosterone levels, feeling better. Retention indications are showing it's in line with some of our best-in-class categories. And on the lab side, also, it's just providing people data that, frankly, used to cost somewhere between $5,000 or $10,000. And so it's an immense amount of knowledge. And then from there, 70% of those people are identifying an area of concern and an area of clinical risk that the platform can actually help treat. And so I think both in hormones and labs, we're incredibly encouraged. We've got dedicated efforts on both of those. And I'm fully convinced that they will be big parts of the business going forward and for the coming years.
Thank you very much.
Your next question comes from the line of Brian Tanquilut with Jefferies. Please go ahead.
Hey, good afternoon, guys. Maybe just a quick question, Yemi. As I think about the range of guidance on EBITDA, pretty wide range there where it could be down or up in the year. Just curious what the swing factors are that we should be considering that would drive the variability there. Thank you.
Yeah, I think it's a great question. I think a lot of it is, like we've historically done, in the past, we stage gate many of our investments where as they hit scale milestones or as they achieve unit economic profiles, we tend to lean in a bit more. As you look kind of at the end of 2025, we launched three specialties that we feel have the ability to be fairly transformative to the platform. And so I think what our guide provides is the ability and the flexibility to lean into continuing to scale those specialties if we see them achieve promising signs on the unit economic front. We spoke a little bit around how we're investing in tech and then some of the ROI that we expect to see there. Additionally, embedded in our guidance is the flexibility, to continue to proceed with many of those investments as they show signs of success. And then the final area of investment, that we spoke around really is just in the international business, both in terms of as we do the integration of the assets with some of the companies that we've already closed upon, such as Livewell, as well as Zava, but also, with Eucalyptus potentially coming in the second half. We wanted to leave ourselves a wide enough range to invest across all of those areas. And so if we see meaningful opportunities for growth in technology, meaningful growth opportunities in new specialties, or meaningful growth opportunities in international markets, we definitely want to take the growth orientation to take them, because we feel like, as we've demonstrated in the past and from past pattern recognition, the ability to expand margins with greater scale is something that our teams are quite good at.
Got it. Awesome. Thank you.
Your next question comes from the line of Glenn Santangelo with Barclays. Please go ahead.
Yeah, thanks for taking my question. Hey, I just want to follow up on the 4Q US revenue number being up 17%. I was kind of curious, if we were to sort of parse out the compounded GLP-1 revenue, were the compounded GLP-1s a headwind or a tailwind to that number? And the reason I ask, right, is because, Andrew, you're sort of talking about, that it's becoming such a small part of the subscriber base, but yet, Yemi, you sort of talk about it as a $65 million headwind in 1Q. I'm just trying to reconcile all those data points and how we should think about, the contribution at this point, particularly within the fiscal 26 guidance. Thank you.
Yeah, well, I think maybe I'll start with that. I think what you do see, kind of in the transition from Q4, and then I think you'll really see this in Q1, is just we have a shift to where we are recognizing a lower revenue per order. That's not just a shift on new customers. I think it's a shift across the entire business that's progressively happened over the course of the last, call it 2 to 3 quarters. The ticket size for the GLP-1 business, is a bit larger, than our core business. So the revenue impact as well as the EBITDA impact, there that we see, is fairly meaningful. But I think that said, I think while GLP-1s have been a meaningful growth factor to the platform over the course of the last year, as we kind of stated in the prepared remarks, the vast majority of the revenue is made from the non-GLP-1 business. And as we continue to diversify, we expect that trend to continue. Then Andrew, not sure if there's anything you wanted to add more broadly.
Nope, I think that's right. Thanks, Yemi.
Okay, thanks.
Your next question comes from the line of Ryan MacDonald with Needham & Company. Please go ahead.
Hi, thanks for taking my questions. Andrew, obviously a lot of news flow sort of post the pill launch and then sort of pulling the pill from the market. Can you just give us an update in terms of sort of where sort of things stand from a regulatory perspective, if you've had any conversations with FDA or DOJ, or sort of what level of concern, I guess, there is around that? And then the second question I have is around clarification on your earlier response. I think it was to the first question. You talked about that obviously the pipeline is very strong for at least a dozen or 2 dozen treatments in the next couple of years here. As you think about supporting that broadening assortment, do you intend to do so via branded partnerships as those come to market, or sort of continuing sort of the historical practice within the business of focusing on personalized offerings instead? Thanks.
Yeah, Brian, it's a great question. On the pill side, as well as the others, there's probably not too much we can say. I think we believe that the pill was a continuation of the strategy to broaden greater personalized options for patients on the platform, and spend many months working on that. I think we pulled it back to prioritize, honestly, just engagement and the relationships with the ecosystem stakeholders. We talked to quite a few of them on launch, and understood their dynamics and chose to prioritize them in those conversations, and so decided to pull it. Regarding FDA and DOJ, I don't think we can share too much on anything ongoing, but continue to welcome their conversations, and as we've talked about within the FDA in the past, feel very strongly that they play an important role in the safety of consumers, and so are happy to be working with them to figure out the areas of concern. On the pipeline side, when you look at the weight loss category in specific, I think there's an accelerating amount of treatments that are going to be coming to market that are on the branded side of the business. So, this is next-gen biotech that are in phase 2 and phase 3. This is some of the larger players. And so I do think consumer sentiment and consumer demand is going to continuously change. You see that in the last few years from when these drugs first came to market, with the launch of Zepbound vials. You see traffic dynamics moving pretty materially when you look under the hood. I think that's just gonna be the evolution of this category, where you're gonna have more and more options. They're gonna be at different price points. They're gonna have different side effect profiles. They're gonna be known by different providers. And ultimately, I think for us, as we've said, across all of our categories, we've seen breadth really matter. And so I do think we'll continue to evolve our platform, evolve our relationships and our approach to make sure that, what we have on the platform is what people want. I don't think we are stuck in any single way. I think we have prioritized the consumer up until this point for what we think is best for them and what they are looking for and what they want. And as that changes, we'll continue to change with them.
That concludes the question and answer session. Ladies and gentlemen, this concludes the Hims & Hers fourth quarter 2025 earnings call. Thank you all for joining. You may now disconnect.
What a trash business. What a trash business, bro. I can't believe there's people actually bullish on that. I can't believe people are bullish on that, bro. That is a garbage business. Crazy. Shout out to the German homies. Make sure you guys hit that like button on your way out. God damn, an active ass chat, bro. The Germans be active in the chat. I don't get the business. I don't need to. I don't need to get it to know it's trash. Stock's overvalued, obviously. What time is it in German? I have no clue. It's midnight there, I guess, according to Jeremy. Who said I bought Hims? Yeah, I don't care what some analyst price target is. It doesn't mean they know anything about business. Smoke some copium? I don't need to do anything. I'm not a shit business. I don't need to do anything. You guys are the ones who are invested in this dog shit, not me. Revenue means nothing. Revenue literally means nothing. How do you double your revenue and you're still fucking making the same profit and you have no free cash flow? Yeah, revenue must matter a lot. Revenue must matter a lot. I didn't buy Hims, I am him. What's up, Hugh? See you at $50. It's never going back to $50, so keep dreaming. Keep dreaming. You said you were invested? When did I say that? I'm way too salty? Okay. Whatever you say. I'm not the one down 7%, probably more, in some random dude's chat talking shit. This is my stream. I can say whatever I want. You guys are in my stream talking shit because you think this garbage company is valuable and you disagree with what I say. So you can think whatever you want, but I'm a better investor than you. I know more about business than you. So when this piece of shit is trading at like $5, you know, you'll remember. You'll remember this day. You guys can keep praying that it'll go back up, though. You guys go ahead and keep praying that it goes back up, because it's never going to. I guess Germans aren't very good at investing. I guess Rosh is the only German who's good at investing. Oh, free cash flow hasn't just fallen, it's negative. There's a lot of reasons why it's a trash company. Not just free cash flow. What stocks do you prefer? I prefer GameStop and only GameStop. The only undervalued business on the market, literally GameStop. So that's the only stock I like, because it's the only undervalued thing on the market. Well, fair valued, I should say. I don't think GameStop's undervalued, but it's the only fair valued thing on the market. If you guys think GameStop's dumb, it just goes to show that how little you guys know about business. So it makes sense why you're all here, invested in this dog shit, if you think GameStop's not a good business. It makes sense. It makes sense. How can you guys be invested in Hims and say GameStop's trash? That's crazy. You literally are just showing how trash, like, your investment, like, perspective is. Like, you guys literally know nothing about business. That shit's wild. That shit's wild. You're invested in this dog shit fucking boner pill stock, but you think GameStop is trash? Yeah, you guys need to go get educated. You guys need to go get educated. If you're looking for subscribers, insulting people isn't a good strategy. I don't want any of these idiots to be my subscribers. Literally. Why would I want a bunch of retards to be my subscribers? Like, legitimately. If I was looking for retards to be my subscribers, you know, I'd probably be like I don't know, but I wouldn't be talking shit to a bunch of idiots in my stream if I cared about subscribers. But there's not a single person here that I want to be my subscriber. It's fucking Germans, bro. They don't know anything about business. They invest in boner pills. They don't know anything. They don't know how to read a balance sheet. They're investing in a 3.5 billion market cap company that barely makes money. Fucking idiots. I'd rather burn my money than buy GameStop. Well, it's because you don't know anything about investing. And you are burning your money. You're investing in dog shit like Hims and Hers, so you're doing exactly what you said. You're burning your money instead of buying GameStop. Crazy. This is amazing. Yeah, I didn't dumb. Like Rosh puts a good profile. It's the fucking idiots. You guys got nothing to say about that, do you? That was pretty funny. They talk real big until the war gets brought up. America made them their little bitch. Do I like Trump? No. Trump is a crypto scammer, so not really. Most intelligent American? Yes. You're right. I am. Try to disprove him at least. Yeah, he can't do shit. He can't do shit. He's a Hims and Her investor. He's all high on boner pills. He can't even come up with anything cohesive to say. Well, that was a garbage stream. Thanks for all the views, though. Appreciate it, you Germans. Appreciate all the views. I'll make a whopping $10. I'll make a whopping $10 with all the views you guys gave. Thanks. Appreciate it. But I'm done with these German fucking idiots. You guys have fun with your boner pill stock. When GameStop's when all the companies you're invested in are dog shit and in the shitter, and GameStop's double, triple, quadruple the price, you'll know where to go. You'll know where to go. All right. Goodbye. Have a good one. Shout out to the OGs. I appreciate you. Appreciate you guys. Later.